Good morning, everybody. Welcome back to the Clear to Close podcast. I am Carson Jones with Team Honey Real Estate at Realty One Group Goldmark here in St. George, Utah. This is my co-host Ryan Bolton with Synergy One Lending, my preferred lender, and in my opinion, one of the best lenders you could possibly talk to in Southern Utah. How about that?
Ooh,
is that a good intro?
Nice. Well done. Well done. Your check's in the mail.
Good. Well,
there's a RESPA violation. All right.
Yeah, no kidding. Better edit that out real quick. Today we're going to be talking about thankfulness because Thanksgiving week. We're uploading this, I think, Tuesday before Thanksgiving. So we're talking a little bit about thankfulness. And in the real estate market, you kind of wonder, how could you be thankful for everything right now? Well, we're going to talk about why maybe we should be thankful for a little bit higher interest rates right now and how things have been going up. Kind of seeing a little bit of a downturn over the past week, and then it goes up a little bit. So I think volatility is the best word to describe it. But so we're going to kind of talk about maybe why we should be thankful for the interest rates of where they're at and what you could do to actually take advantage of what's happening right now. So do you want to kind of start us on where your opinion goes with all that? Because I mean, I know people saying, why in the world would I be thankful for what is happening with the interest rates right now? But.
And I think you should be thankful because what it's doing is it's stabilizing the marketplace. It's something where you cannot have a seller's market, a 1 month inventory, and have that be sustainable. It needs to be corrected back to more of a natural market. And this is the natural process with it. And really, interest rates are still good if you look at the last 50 years. You ask any parent, you ask any grandparent about interest rates, and every one of them will tell you a story of 10%, 12%. So there is a sense that we are still more of a normal market. Those rates at the 3s and 4s are not normal. They're trying to fix what's going on in the market. Well, that's been fixed. So why don't rates go back up to what it normally should be? But look at what else has happened with interest rates. You don't have these massive bidding wars anymore that were unhealthy. You don't have people paying way more than what the home is really worth. You also don't have a lot of financing that is way too aggressive or just giving money away or making these exceptions that are making it worse on the market. So this is a good thing. It's showing the market is stabilizing. It's balancing what it's supposed to happen so we don't have a crash. Now, all this talk about crash, that's what they're doing to prevent that from happening. And everybody that owns a home didn't get bad financing or overextend or borrow way more than what the home's actually worth. Almost everybody put these large amount of money into buying the home, and they had to do the financing with down payment on top of what they were doing. So you have all these stories of people paying $50,000 or $100,000 more than what it was worth. That wasn't because the loan did that. That was them bringing the money in, seeing the value of buying and the wonderful area we live in. People want to be here. They're willing to pay that much more. That just shows you how great St. George really is because of all the people willing to pay and see the value of the home, even if it is more than what it really was appraised for. Right. So having interest rates go up, it might be scary with how quick they've gone up, but it's natural. It's supposed to happen, and it's going to have more benefit than disadvantage in the long run. It really will.
Yeah, and I think a lot of it comes down to, I think if people would just maybe take advantage of this state of the world a little bit more, I think people will regret not taking advantage. Even it could be even as short as 6 months from now, right? Mm-hmm. But with that said, you've got people who right now they're just in fear. They're saying, "Oh, well, the interest rates are so high. I'm going to wait for the market to drop." Well, the market is kind of dropping with the interest rates right now. Okay. The problem is the only way the market really drops is if the interest rates go even more through the roof, right? Which one do you actually want? Do you just want to keep paying more and more in interest, or do you want the market to just drop way low and you have a lower purchase price, but now you'll have to go through a refinance someday when interest rates drop? But in my opinion, where we're at right now, I mean, kind of, it seems like recently we've been going in anywhere between like 6.5 to 7.25. Would you agree with that?
Yep, that's been kind of the last few months.
So what you got to remember is that right now, just the listing price on the house is not what you're going to buy that house for. In the past few years, if the house is listed at 600, you're going to buy that house for 675 or 700. It's going to be way over asking price. Now, if that house is listed at 600, you might be able to buy that for 550 or less. And sometimes what's even better, which I would encourage everybody to look into and talk to their agent about, is ask the seller to buy points down for you, because then it's the best of both worlds. Then all of a sudden you've got an interest rate that's lower, okay, that you might even get your interest rate lower than what it will be in 8 months or a year, right? So you can have the sellers buy down interest rates. I think is 6% the maximum.
Yes.
6% the max.
They contribute up to 6%. And then you can still, there's some certain caps. There's certain bona fide discount points that can go above that. But that's the general rule of 6%.
I mean, just think of that. Even if you say, okay, I want to pay $520,000 for this house. Well, offer $550,000, right? And then with that extra $30,000, you say, hey, I want you guys to put $30,000 towards my closing costs, right?
That's such a great point. I have so many times where people see a price and they want to offer less. And I said, really get more for what you're buying.
Yeah.
Because that's one of the cheapest ways to cover the expense without building it into rate, or use the leftover money to buy down the interest rate. That will make your payment less by actually having a higher sales price than having it lower, by building those things in. A lot of people think, well, I got to have my 5% down, my 10%, my 20% down, but closing costs are on top of that. I can't tell you how many clients will call up and say, hey, can I just roll that into the loan?
Right.
You really can't. You can't. You can roll it into the sales price, but you can't roll it into the loan, because it's something where the loan to value, or that percentage down, is where the loan amount stops at. So you can't do, say, 20% down and then add 3% and do a loan at 83% to cover those fees. So the cheapest way, I've done the math so many times, don't build it into rate, bring in the money to the table, bring in an extra 10 grand to the table where it makes a $5 difference. Where can that 10 grand go?
Yeah.
They can get rid of the other expenses or just savings, or it just doesn't make any sense to tie up 10 grand to only save $10 a month.
Of course. And the problem is, people look at this in very small increments of this. They look at this as, oh, I'm going to save 10 grand. Well, if you would have, you might not actually be saving that 10 grand at all. In fact, you might be paying that on something that's not equity, right? You might be paying that on something that you could have say, okay, I'm going to put a pool into my house or something instead. All right, now I'm just going to wait. I'm going to let it see what happens. Well, everybody thinks that what's going to happen is what they want to happen, right? Yeah. And we've been there, I think, in all of human history.
Yeah.
And it's like, it never turns out exactly how you wanted it to happen.
And you look at the last 30 years, home values have gone up over 300%.
Yeah.
Even counting 2008, where we had one of the biggest corrections. Anybody that went through 2008, that's what we always think about. That's what every post you see on Facebook, everything, another housing crisis. This will not be the same way. Now, I have people saying this might hurt longer. There's other things in the economy that might be slowing things down that much more. We're still reeling from the pandemic and supply chains and forces well outside of our control with politics, and just election years always cause big issues. Midterms usually matter, but boy, this year was more in the news for midterms than I've seen in a long time. I think it's a precursor to probably one of the bigger elections.
Yeah.
But I think it's media too hypes it up so much. It's like, this is the biggest election in our entire life. When has it not been the biggest election in our lifetime? Now, this one does feel maybe a little bit more, because you've got very much more of a partisan country. There's been a lot of changes with it. The reaction to the pandemic is either pushes you to one side or the other. I mean, it is something where the election years are always a mess. I think this is going to be a longer election year, because it is something that everybody's going to be looking towards 2024. But it is something where we're talking about being grateful for higher interest rates. Kind of feels like an oxymoron, but there's always a silver lining with everything. And it's something where, as rates go up, it will stabilize prices, which is what we needed. Do we really want to see home prices go from 3 to 4 to 5 to 600,000 in that short time frame? No. Yeah. It needs to be a little bit more steady to allow supply chains to catch up, to allow land development to catch up. That's something in St. George that's been always a little behind those curves, is just developing the land to even start building the houses. And when there's such a huge increase in demand, because of how wonderful it is to live here and how we've been so discovered, you're not giving the developers enough time to get lots at a reasonable price. So that's another great reason why interest rates. The other thing, it gets rid of part-timers. It gets rid of uneducated people in the industry, both real estate agents and mortgage. You're not going to see as many of those people because they don't know how to service a client and get out there and grind and actually work in the industry, instead of just opening up their garage and ABC Mortgage Company and leads just come in. You mentioned a couple of times you could have got your dog licensed and you probably would have sold a couple homes.
Of course. Yeah. I mean, the past few years, it's been easy for myself. And then we look back at it, we're like, boy, I wish I would have tried a little harder these past few years, because look how well we could have done.
Yeah.
Right.
There's always that sense. Our industry, we did.
You always feel like you could have done more.
You really do. And in our industry, I saw a report that we did like 5 years worth of refis in 18 months.
Yeah.
There was burnout all over the place, processing, ops. That's probably the sad thing that I see in our industry right now, is the people that had to work all this extra time. They're unfortunately the first ones that start getting laid off, because they're the hard cost to a mortgage company. Like me, we only get paid when we close a loan. Same with you. We don't, just like lawyers in the sense, we don't get paid unless we close that deal. So we're really not a huge burden on the mortgage company, other than benefits. You know, you've still got benefits and insurance and stuff like that, but it's not that they're paying us a salary. It's not like they're paying us something that is a hard cost, where processing, funding, underwriting, some of that stuff is a hard cost that unfortunately that starts getting cut. But it also, the cream rises. The ones that did the extra work, the ones that are still there, those are the ones that are going to stick around the longest. But it is something where I'm grateful for higher rates, because it weeds it out, it stabilizes the market, it allows more people an opportunity to buy a home, and really homeownership wins.
That's just it. It's opportunity.
It is. There's opportunity in every market.
Everything in the news, everything people are telling each other is, this is a terrible time. This is not the time to take advantage. That's when the opportunity comes. When everybody's saying, "Oh no, don't do it, not right now." That's back. You know, okay, I don't have as much competition right now. This is my opportunity, because prices are higher. Now is your time to negotiate. Trust me, there will be a time coming that you can't negotiate anymore, and your negotiating is going in the opposite direction. And so
that's what you see too. The building permits in Washington County for 2 months in a row are like the lowest they've been in 25 years.
Yeah.
So builders are pulling back a little bit. So that inventory, as demand continues to rise, because we're still a great place to live, there's still people moving here. Maybe it's slowed a little bit, or people are kind of waiting and seeing a little bit more than they were. But I look at this and say, you're going to have a housing expense.
Yeah.
You're going to have a housing expense either way. Why not own it? So maybe you can afford $2,500 a month, $3,000, whatever that dollar amount is. Go out and find the home that fits that budget. Because guess what will happen? If market goes down or opportunities pop up again, then you can turn that home into a rental property and go buy another one.
Yeah.
Or it's something where that one's going to have a bunch of equity. And what benefit are you getting from renting? It's literally 110% interest. Everybody says it's 100%. It's literally 110 when you factor in any appreciation, tax benefits, and the fact that rent payments go up way more often than a mortgage payment goes up. I mean, a mortgage payment is locked in. Yeah, tax and insurance might change a little bit, but your payment's going to be so much more consistent on a mortgage than it is on any kind of rental property. Well, and when you write that check every month, doesn't it suck? Don't you just feel like, oh, here's another $2,500 for
I mean,
30 days?
Just for what I do for office space alone, it's like, man, how great would it be to own office space, whatever you're doing. It's like, man, could I just be an owner? Unfortunately, commercial right now is, I can't believe how expensive commercial real estate is.
Commercial always is a little behind residential.
Yeah.
Because as there's more people that move in, suddenly more jobs and more opportunities, more businesses have to open, and they always are a little behind that. But same thing, St. George is so discovered that they're just a little behind making commercial space. There wasn't that much that was available. So the city had to start allowing more space. They've done a lot of renovation on the downtown area. They've opened up some more land there. So it's always a little behind the residential curve. It all kind of echoes it, is what it really does.
And so I would say one thing right now with this real estate market and interest rates is that there's only really one guarantee. And especially within Southern Utah, there's one guarantee, and that is that eventually here we are going to get back into a inventory problem. We're going to get back to the point where there's a lot more people wanting to buy than who are willing to sell.
And how many cycles have we seen that with St. George? Because it is such a discovered area in these waves, because you'll have Ironmans, you'll have marathons, you'll have World Senior Games, and just the I-15 corridor has gotten busier and busier. Water issues have been worked on, and there's just so many more people that are finding out about St. George. I often say if everybody in the Phoenix, Vegas, kind of the dirt areas found out about St. George, they'd move here, because there's more color than most of the desert. It's closer to certain things. You're closer to other climates. I mean, literally, they got 25 inches of 25 feet, some crazy number up in Bryan Head. They opened earlier than they've ever opened before, and that's 45 minutes up the road.
Yeah. Yeah.
Most of the time when you have this kind of climate, you're not that close to ski or Zion National Park or Grand Canyon or anything but the ocean. That's the one thing we're not next to the ocean. It's the only thing. Other than that, we have every climate you can think of within like an hour.
Yeah.
That is amazing. And it's so discovered. You don't have the humidity, which sucks.
It does. It's dry out here, of course, but the thing is, it's much more livable in my opinion.
I agree.
It's dry. You don't have to change your shirt 5 different times a day because it's so humid.
Well, I tell people all the time, you're going to lose 3 months of the year at least for snow, humidity, or heat.
Yeah.
Choose heat.
Yeah.
It's so much easier to deal with. You can get away from it that much more.
You can still live. And you're going to get beautiful days within that.
Oh, yeah.
You're going to get days where it's like, hey, it's only 98 today and a nice little breeze and it's cloudy. It's great. I mean, you get days like that it's like, this is not that bad.
Well, I remember telling a client, hey, we're 105. And they're like, oh, because they know they're used to 105 with humidity.
Yeah.
It's like, I've been in 105 or 98 with 110% humidity. And it's so much more hard to deal with. Like I went to visit my brother in Florida and he'd gotten a little more used to it. And I remember coming out of the airport and just the wave of just, whew, I'm like, oh man, I thought it was good. High tolerance for heat.
It could be 90 degrees and be like, this is way worse than 105.
Oh yeah. It really is. And it's amazing how easy you can adjust to that. I mean, our first year moving down where we ended up going back up to Salt Lake City for birthdays that were in November. They have a lot of family had a lot of birthdays that just happened to be in November. And I remember we went up there with short sleeves and all this kind of stuff and froze.
Yeah. Well, and one thing that people don't realize about St. George, they look at St. George and they just think, oh, it's so hot here, right? But that's because the people thinking that way are the people up in Salt Lake City, which sure, compared to Salt Lake City or northern Utah, it is going to be hot here. But if you talk to somebody in Las Vegas or Phoenix, they say, oh, do you guys get much snow up there?
Yeah,
we're actually a little bit like yours, but even then, we're still a lot of the time 7 to 10 degrees cooler than Vegas and Phoenix. Phoenix, we might be even more than that.
Yeah, and I think it's when the heat hits is the biggest difference with Salt Lake. Their high hits at 2, our high hits closer to 10, or 8. It hits a lot earlier in the day and kind of just stays that hot. But you still can do things at night.
Though.
Yeah.
I don't think there's a place in the world that has evenings nicer than St. George.
I agree.
Because even in the middle of the summer, middle of the summer, once the sun goes down, now, of course, it goes down pretty late at night, but once the sun goes down, you want to be outside. You're outside. You're like, I don't even want to go inside. Because then you go inside. I don't even want to feel the air conditioning anymore. I just want to sit outside. It's so nice. Once that sun kind of starts going down, it's great out there.
And that's really where I've often used the phrase that in St. George, you're more in the painting. Like every other place I've been, it's kind of a backdrop. It's a mountain range. It's just kind of this big Wasatch Front, or it's just Vegas that just has the lights and everything of downtown, that kind of thing. But it always kind of feels like it's just a paint. It's something that's a backdrop. Where St. George, you're in it. It's more 3D. You're kind of driving around these red buttes. You're looking at red mountains that have just more 3D look to it. I think that's the best way to do it. And most of the time you think of desert, whether it's Vegas, Phoenix, it's a lot more gray, just brown, like Palm Springs, just kind of more brown and not dead looking. But that's what makes such a wonderful contrast with the green golf courses against that gray backdrop. But here, I love this shot at Coral Canyons, number 16, that par 5, where you have all that green, then you got the red rock, then you've got the mountain.
Right now
and
you got a little snow up there too. So.
It is one of the most pretty little views of like every climate. You can see basically looks like the green grass got rained on, you got red rock, you got the gray, and then you got the mountain. I'm telling you what, that's one of my favorite views this time of year is going up number 16 at Coral Canyon. It's just awesome.
So here we go once again obsessing over our city, but that's okay. That's why we're here.
Yep.
So to finish off, should you be thankful for interest rates right now? Maybe. In my opinion, I feel like if you are willing to take advantage of it, then you're going to be really happy that you take advantage of it. Hire an agent who is willing to show you the different possibilities of negotiating. Unfortunately, a lot of agents don't know the possibilities right now, but hire an agent who's willing to say, hey, I know that we could get this house for $520, but we're going to offer $550, and we're going to get that seller to give us an extra $30,000 just to pay down on our interest rates, on closing costs. And then all of a sudden, wait, your interest rate might be better than what it's going to be when it does start dropping here and eventually, right?
And I think people need to focus on their payment. Yes, interest rates, maybe your payment at $2,500 doesn't afford as much as it was before, but you have more opportunity. There's more homes to be able to choose from for that payment amount, and you're going to have that payment. Why wait 6 months of paying $2,500 somewhere else, or another year renting for $2,500 a month, when most likely that $2,500 next year won't have as much opportunity to buy a home. There won't be as many in that price range. And there may not be rates even higher, that your buying power goes down even further, and you're going to still have that payment. Now, I know people are saying, well, if I buy right now and the home value goes down, there is a potential for that, of course. But there's potential with a car. Look how many people overbought a car right now, and they don't sit there and worry about what that value is. But if you look at historically, even during the worst housing correction we've ever seen, it's wiped away.
Yeah.
The values have come back. They've come.
Yeah.
There's nobody that's lost on real estate in 30 years.
Yeah.
It's been the biggest wealth creator. You can leverage your money better. Even at interest rates today, these rates are actually the same as what it was before the 2008 crisis.
Right.
It really is. So this is more what rates should and normally should be. This is where we hope they will stabilize, of course. But this is, like you said, there's opportunities to buy. If you're not buying because of fear, then every time you write your rent check for $2,500, that should be scarier than buying a house right now.
Yeah.
If you can afford one, if you can find one in your price range, you will be in 6 months. I guarantee you. It's happened in every market, even 2008. If you buy a house right now in 6 months, you'll be better off.
Well, you're right. And the problem is, if you do decide to wait, right, it doesn't mean in 6 months from now, we suddenly have a perfect economy, right? And you're not ever going to see that perfect economy, but people keep waiting for that. And people during COVID, they were all waiting for this to be done because it's too high. It's too high. Okay, well, now interest rates are too high. So you're never going to have that perfect point, right? So that's...
And if it does become perfect and everybody else is waiting, what's going to happen?
Yeah.
It's going to be a run on the banks again.
Well,
and all of a sudden there won't be enough inventory.
And you can't
bam,
negotiate. And you can't negotiate. And that's the biggest thing that it all comes down to, is that when people get this whole, oh, I'm going to wait until the market starts falling. Okay, well, now we're going to have buyers like crazy again, and quickly it will turn into a massive inventory problem yet again.
Yep.
And guess what? Now it's not a good time to buy, because it's going to take you 30 different offers before you get into a house, right?
Yeah. I don't know whether I've seen it so much throughout my career. There's always this kind of, I'm going to wait for something better. I'm going to wait for something better. I'm going to wait for something better.
Negotiate.
I remember a guy one time, we had him at 3 or something, 3.25 when rates had dropped. He's, I'm going to wait till it's 2.25.
Yeah.
And never, if it did, I don't think it ever got down to the low unless it was a 15-year term, especially with the situation you had in credit score and all that kind of stuff. But there's always this sense that you're going to wait for something better.
Yeah.
It's better to buy and then wait.
Yeah.
There's a whole saying, instead of wait to buy, it's better to buy than wait. There's nobody that's lost money on real estate, even after 2008. So why are you waiting?
Yeah.
You've got a certain budget. Go find a house that fits the budget. Worry about the payment. Yes, interest rates are higher. Sure. We're not going to sit here and say they're not higher. But they're not so much higher that it's impossible to find a home that fits your budget now. No. Where before it probably was. Even at 3%, you couldn't find a house.
Yep.
Like so many people couldn't find in the bidding wars, and people were paying way more. That's all gone, which is what we wanted. This is what we wanted and needed. Maybe not quite as quick, I admit. Maybe we needed rates to go to 4 or 5 and then 6, over the next little bit, not 6 in 6 months. But it is something where this is what we needed. So there's opportunity there.
Yeah.
Stop listening to people that are just trying to tell you the housing market's going to crash.
You got to take advantage of it. And it's because nobody else is taking advantage of it.
Yeah.
The past few years, again, I keep bringing up negotiate. Negotiating wasn't a thing.
Yeah.
You couldn't negotiate on these houses. You were just bidding against other people, just trying to make a higher and higher offer, right? Mm-hmm. Now is the first time in a long time where you have the power to negotiate. And a lot of that power to negotiate also means I have the power to try to get my interest rate lower, which is the best of both worlds. Now you don't have to compete against all these people, and you can still get the interest rate that maybe you've been trying to get here for a little while. It's, easily 5% or less, depending on how much you can get them to buy down off of this, off the sale. So,
and I'd say something else that we've talked about a couple of times. I just thought about real estate's local. It always has been local. There's regional news. What's happening in Detroit and Chicago and New York and Florida isn't necessarily what's happening here. Yeah. You have to look at the cities. What cities are growing? Who's gaining more citizens versus losing people? Who's flooding to certain areas? That's what matters on real estate. Yeah. And really, again, if you can find out what you can afford and get qualified, get pre-approved, just go through the numbers and say, okay, today this is how much I can afford. Go out and try to find that house. You'll find more now than you did before, even though rates are higher. Yeah. Now, maybe your buying power is less. Maybe you can't do a $600,000, $700,000, $800,000 home for that same payment. but there's more opportunity in the price range that'll actually work.
Right.
And there's more, like you said, opportunity to be able to pick the things you want instead of, hey, I got one home to choose from. I'm bidding with 10 other people, and some guy's going to come in at just pounding his chest and say, I'm going to pay 50 grand more.
Yeah.
You don't see that.
Yeah.
I saw a really interesting thing that said, yeah, the price of the home was 400. It sold for 450 at 3%, or now it sells for 375 with a 6% rate. The payment's the same, because of that correction of not having to overbid for the home. So there is a reason to be thankful for the interest rates, because if they didn't go up, that market was unsustainable. Then we're really looking at a crash. The whole idea of this is to prevent crashes and just get back to what a normal market really should be. This is what a normal market should be.
Yeah.
There should be an opportunity to negotiate a little bit. There should be more than one home to choose from. And there shouldn't be this huge influx of people paying so much more than what the home's really worth. But it just, again, shows why this area is so wonderful and why people are choosing and see the value. That's one thing. Locals see a $500,000 house and go, man, that's way more than I can afford. People outside the area going, that's only $500,000? Done, sold. Give me two of them.
I agree. Well, and you look at people who are trying to sell right now. Now it's actually one of those things where, it shouldn't take 24 hours to sell, but it still can. And that's why now, probably more than ever, it's so important to hire a realtor who's actually, they know what the heck they're doing. There are so many agents who they just sell a ton of houses. Well, they're just posting online and hoping something happens. That agent is really going to struggle to actually get these places sold over this next little while. I mean, you have to have somebody who can market the house and get it in front of the right people. And a lot of that comes with pricing it correctly. Yeah. And I mean, Christine Hansen, she's an agent on Team Honey, and she just had a listing over right here in Southgate. And she listed it, I want to say she listed it at 630 or something like that. And within 4 days, we sold over $660,000. And I think we had 6 different offers on it. And that's, I mean, late October. So it's possible to get more than what you even thought. I mean, these people wanted to maybe get 630 to 640. And we said, okay, let's list it down here because we actually think we could do more, right? And sure enough, Christine was able to sell this house quickly for more because she marketed it correctly, and she showed the house like it needed to be showed online, in video, in photos, and then just put it in front of the right eyes. So if you hire the right person right now, not only can you still get, I mean, more than you probably even want right now for your house, but it doesn't even have to take that long. So make sure, be careful when you're hiring an agent. Don't just hire somebody who just comes to your house saying, oh, well, I've sold all this many houses. Well, yeah, anybody could have sold that many houses in the past few years if they just would have given a listing for $500, not to name any names, and then just say, okay, well, here we go. I'll throw it on the MLS and I'll let you know when another agent calls me with an offer.
Yeah, and it's such a good point, because there's a lot of people that aren't putting their inventory is still an issue. It's caught up a little bit because things have slowed down. The demand has slowed down, a little more wait and see that's going on out there. But because of that, there's also the next wave of inventory is also going to be a lot less. That if there is some sort of correction in rates, even a little bit, like we saw a little bit, and the buzz kind of kicked up, even was only 0.25% better on the rate. Mainly because I think it just kind of stopped that trend. Everybody's like, when's it going to flatten off and maybe hopefully correct a little bit? But it is something where most of the people that have a house right now still can't replace it, so they're not putting the home on the market. Builders are slowing down. I think we're going to have a similar issue next summer with inventory in St. George, where we're going to have less choices. So this is usually a good time for opportunity, no matter what the market is when you get into the holidays, you get into that season, you've got people a little more desperate to sell because they are selling during the holidays, so they have some reason, maybe a death in the family, or they're relocating, or some reason maybe they start building a home in the summer. Now it's getting ready, so they have their home they have to get sold. There is opportunities right here where everybody's pulling back. There is opportunities because as people pull back, there will be people that are always desperate to sell, no matter what the market is. Those are the ones you can take advantage of when everybody else is pulling back. So
you're right.
Just hearing the national news, oh, there's a housing crowd, not going to do it. Take a little look at why is everybody pulling back, and you'll start realizing that maybe there's opportunities in those shadows, in those gaps. There's always opportunities. That's where people make money in real estate. It isn't when the prices are going through the roof, because they had to buy in before the prices, so it's a lucky timing thing.
But that's when people make money in everything.
Right? What, stocks, bonds, cars, whatever it is.
Everything you do. I mean, that's when people make money, is when everybody else is a little bit on the fence. Say, oh, I don't know if I want to jump over, right? I don't know if I want to go dip my hand into that right now. The one who does, more often than not the one who's actually going to take advantage of it. And then in a few years, you're like, man, I wish I would have done it back then.
Happens so much in real estate. I can't tell you how many times. Oh, I wish I would have bought last year when rates were this.
Next year, I wish I still would have bought. Next year, I wish I still would have bought that last year. Right?
It happens so often. And again, you have a certain payment you're comfortable with. Go buy a house that's comfortable with that payment. You have more opportunities to do it. And then wait it out 1 or 2 years, 3 years, maybe.
Yeah,
maybe forever. Maybe that'll be incredible. I've got rental properties all over the place that because I bought at the right time and now rents have gone up so much where it's like, I'm just going to keep it in cash flow and rent it.
Right. Yeah.
So it is something where it's not all about the investment. There's a pride of home ownership. There's a thankfulness of being able to have pets or be able to customize the house the way you want to. And you don't have to ask a landlord. Usually you have more square footage. You have a garage. I mean, there is a pride in home ownership and the fact that you have a budget, go find a home that fits that budget, regardless if rates are 10%. You can afford this much, go find the home that fits the budget and buy. I
agree. Well, tell us why you're thankful for interest rates being higher.
I think it really is something where
I would think about it. I would think about maybe why you are so upset about interest rates being so high and think about, man, should I maybe be taking a little bit more advantage of this rather than just assuming that this is the worst thing that's happening right now with the real estate market.
Yeah, I think whether it's politics, whether it's real estate, whether it's anything, people have talking points that never go deeper. Yeah. They see a headline and they never go deeper. And even we're such headline society now. We're a 140 character kind of thing. I'm amazed at how many times the headline doesn't actually match the article.
Yep.
When you start actually reading the article, you go, wait, that kind of just got me to click on it, or just saw the headline and that's all I base my whole opinion on. So stop looking at just the headline. Start looking at what's behind it. What's the motivation of everybody saying the housing market's crashing?
Yeah.
Somebody's benefiting in every market. Who's benefiting right now by rates being higher? Who's benefiting right now by prices changing?
Yep.
Who's benefiting? Be one of those people that are benefiting. Find out I always like looking at the opposite side of any story or the narrative that's out there and try to figure, okay, there is somebody benefiting in every single market.
Yeah.
It can be you by being a buyer right now.
Yep.
It really can. So I am thankful for higher interest rates.
I love it. Well, thanks so much for watching and listening wherever you guys are at. Make sure to subscribe to whichever YouTube channel you're watching this on. I think we have it on 3 different channels right now.
Yeah, I think we have our personal ones plus the clear to close. So yeah, we try to just promote it as much as we can. So I have a lot of fun doing this.
and comment, because we also, a lot of what we are looking for is subjects, right? So comment anything that you can think of that you want to know more about, whether it's mortgage wise, whether it's, in fact, I think next week or maybe coming soon. In fact, it might even be going next week, the week before this, but we'll have a home inspector on and title companies. And so let us know what questions you guys have for them, because we really want to answer anything that you guys want to hear, and less so much of just us talking about how much we like St. George.
Yeah, it comes up a lot, but
it does, but that's okay.
It's great.
All right, everybody. Thanks so much for watching. We will see you next time.